Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. Generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in and take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities, and sharing those opportunities with everybody in the community. We have a special going on right now. Special is the coupon code. You type in special. You get a 50% discount on the first month only on the monthly membership, which turns out being $25 for that first month. And if you're interested in going into a yearly membership, either from the monthly or directly into it, it is $500 for the entire year to try it. Most of the stuff that I communicate is through midweek updates that I release on Tuesday evenings. I also do Q&A sessions on the weekend, and I answer your guys' questions face-to-face through a Zoom call with everyone in the community. All right, let's dive in. So we've got Sam. Solar looks like the new leader of clean energy. That's uranium and nuclear energy versus solar. Resistance, resistance, resistance. And are we going to turn lower? It is a ratio. So I was like, well, why don't I just pull this up? Let's see what's going on here. So NLR has had a pretty big breakout. It has had a pretty strong reversal candlestick month just recently. Kind of zooming in, you can see. Now this does look like a falling, it could be a pattern that is squeezing up into a potential corner. Don't know yet. That could be, I mean, usually when you get these like tight patterns, so tight means they're like this, long means like this. Longer ones are better when they break out versus ones that are tight. So right now it's tight. It might take a little bit of time to work its way on out. But this has had a pretty big move in a pretty short period of time. TAN, which is also a recession or pulling back, double bottom, breakout, and this is a retest, and it's probably going to head higher. So that looks good for TAN, but I'm not a huge solar guy, guys. I mean, you look at the individual companies; they just don't make money. Neither does a lot of the uranium companies either. So, but that looks good. Both charts look good. PSCE, which is an Invesco S&P Small Cap Energy ETF. This would be the one I would look at. This is one that I think will do well, and we could put it against TAN because I did that. This is a falling wedge into a corner, and this is a basing pattern here. There's your resistance through there. Broke out, and it's doing a retest, and I think this is going to go up. I think we got a long way to go in oil. I really do. So yeah, that's my opinions there. Gold and Bitcoin is beginning a secular turn. Gold is breaking out of nearly a 2-year long head and shoulders bottoming pattern versus Bitcoin. This is potentially quite a bit more significant bottom than the rough double bottom of 2021. I like looking at these things myself. So let's do XAU USD divided by Bitcoin priced in dollars. Takes the dollar out of it. Logarithmic. Yeah, that looks absolutely fantastic, and it's breaking out. Bitcoin is eating SHI. You can finish it. And there it is, breaking on out of this squeeze. Bitcoin is lagging. Gold is leading. Bitcoin is falling out. This does not look good, guys. At least at the current time. I don't know if this can change it and turn around, but that's a rising wedge. And it's at the end of the NASDAQ cycle. So we're coming out of this recovery phase of real estate, and I think we're going to go into a big expansionary phase. You can disagree with me there, but um, I think that's what's going to happen when they lower interest rates. And this could be an ugly looking chart, is what I'll say. Um, Other ones that we could also price against. Let me do gold. Let me do oil. Let's see what oil is doing against Bitcoin. I haven't really checked that. Oh yeah, oh yeah. Double bottom this bad boy. So this is gonna end up being your your squeeze kind of in the corner there. This is your double bottom. Look at that. Look at that double bottom. Let me put a new bottom on this. This is just not acceptable. We need a Kim Kardashian bottom, and I don't know if you guys like Kim Kardashian. I don't really like her either, but it's a big bottom. I'll just say that. Here it is, squeezing up again, and you can see we're breaking out of that to the upside here on this double bottom of the KK Kim Kardashian double bottom. There it is. There's your double bottom. This is your falling wedge. And this here, when we get this break here like we have, this is where a whole bunch of money's made. And I'm not joking, guys. There's going to be a lot of money made here. A lot. In oil. In oil. Now, I've got US oil versus Bitcoin. Now, if you take individual companies, I think this is going to be absolutely dramatic as all get out. And this is all based off the cycle. Okay? If someone were to argue and they don't know about the cycle, I don't want to argue with anybody who doesn't know about the cycle. Because it's like you need to read 15 chapters before you get to cycle stuff. Because you got to get to the cycle stuff. And we can do XOP versus Bitcoin too, which gives it the equities. Yeah, guys. I mean, this is double bottom. Look at this thing start to break out. The oil companies are in such a good location. It is absolutely unbelievable. Um, there are so many opportunities I see in the market right now that you could partake in. Here's another one. Look at lithium versus Bitcoin. And I've never looked at this, but this thing is gonna light it up too. Let me see if I can find anything here um, in the chart. So this is kind of like the squeeze up into the corner. This could be like bottom one. You've got this, and then this here. Sometimes they go all the way down, where you get like a extended move lower, which I think we have. And this is your falling wedge, just like oil, and XOP and all this. There's one, and since this one came down, this is going to be a slingshot to the moon, baby. This is, and again, I've got my companies. There are some ridiculous lithium companies that we can gain exposure to at what I would consider to be almost ideal entry points right this second. Right this second. It's not going to be 3 weeks from now. 3 weeks from now, that could be up hundreds of percents. I don't know if it will be. I said it could be. Usually, when some of these companies go, they fly. So they're super volatile. It takes a huge set of cojones to hold on. I'm not going to lie about that. And we're starting to come out. And Bitcoin is, in my opinion, the best of the last cycle of the financial asset cycle. Hard asset cycle's coming, and it's gonna be a lot of fun. It's gonna be a lot of fun. It's gonna take a lot of nuts to hold on to the companies through volatility. I'm not gonna pretend like it's gonna be easy. But some of these things, when they fly, they fly. They really rip. So just wanted to show you a couple of those. Very similar charts to gold versus BTC. It says you are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right, says Benjamin Graham. I want to dive into this right this second. I'm going to tell you some things that people do that are incorrect or wrong. So I might like a company A, right? The reason I'm buying company A is because everyone hates it. So if I say I like company A, what do you think another person's going to do? They're going to go research and try to find opinions of other people, and then use those opinions to either agree or disagree with me. You are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right. I am buying and taking the very fact that people have a differing opinion against me. That's the sole reason I'm buying it. Not sole reason, but it's one of the reasons that I am getting a good deal on it. So you can't use other people's opinions against mine or your own necessarily to make a decision on whether to buy or sell a company. The majority of people and the majority of the opinions are going to be rooted in the herd. And I am taking a sole position against the herd. So if I have a reason or multiple reasons of buying something, I may not have the reason of why the stock may move higher. Well, why do you think that is going to move higher? Well, you're going to have to explain it in a way that deals with positioning. So if I were to explain something, I'm going to say, I buy this stock because the patterns and the value is where you want to be. And there is fear and negative sentiment and negative opinions about this company in the market. So I am buying it because I think we are very close to max negative sentiment, max fear, and the best valuations and risk reward opportunity in the market. But everything you're going to research about this is going to be negative at this time. So it's like people search, they want to go search, they want to use artificial intelligence to see if this is a good entry point. Artificial intelligence is going to tell you that it's risky and that it's a bad entry point, perhaps, although it's the best entry point for the best risk reward there is in the market. Because what AI is going to do is it's going to search and become a part of the herd. It's going to look at articles. It's going to look at all these things and become a part of the herd. It's going to regurgitate what the majority of the herd thinks. I think so. So when you buy these companies, it's not that it doesn't matter. You are neither right nor wrong because the crowd disagrees with you. You're right because your data and reasoning are right, or your strategies and approaches are right. David Burrows, hard assets gaining relative strength versus financial assets. We continue to believe that commodities now play an important role as a diversifier in a balanced portfolio, commodities versus equities. Here it is, ready to break out. We've broken the downtrend. We've got our nice big flag resistance area ready to break. Volumes coming in. This is it, guys. This is it. This is where commodities are going to go. It looks very good. Do not save what is left after spending, but spend what is left after saving, says Warren Buffett. And I just want to say what I do, guys. I am so convinced, I am so confident that we're in a commodities bull market in the earlier stages, not the end, but the earlier stages. I put as much money as I can into all of the investments. I don't spend money. I put it all in. So some people, they get enjoyment out of spending money. I get enjoyment by loading up on amazing assets. Now, I'm probably a little bit over the top, but I see the opportunity, and man, do I want to feed them. I want to feed those opportunities. I'm all about this commodity precious metals bull market. Michael Gayed says, how many people understand that Japan's entire banking system is quite literally insolvent? Yeah, I would say that about a lot of banking systems. But that's your opportunity. You know how they save banking systems? They print a bunch of money. They print a bunch of money. And when that money comes into the system, it's going to increase interest rates. Rates are going to fly higher. Go look at the US 10-year JPY 10-year. This is it JPY or is it JP? I can't remember which one it is. JP 10-year, there it is. This is the government bond yields for Japanese 10-year yields. They're insolvent, yes, and they are printing a bunch of money and doing stimulus to try to buy bonds and create demand. That's what interest rates do. It flies higher. It flies higher. This is going to happen to every single currency's interest rates. The US 10-year is going to fly higher. Now they're probably trying to hold this down. They don't want this to pop. They don't want the stock market to roll over. So they're going to try everything they can to keep it under 5%. And we'll see if they're successful at doing it. But this is what they have to do. If they want lower rates, they're going to have to increase unemployment, but somehow ride the line of unemployment while they kick up unemployment to hold interest or to hold inflation down, which will hold interest rates down, and then not go into recession. Because if they go into recession, they lose the revenue from the S&P 500 and NASDAQ and all that stuff. So they're treading on an impossible line. And if they hold interest rates down, I mean, this is what they'll end up doing. They're just going to lie about inflation, and they're going to lie about probably like QE and money printing and all this other crap. They're just going to start lying, which they're already doing. I started laughing. It just says, I just try to avoid being stupid. You were born that way. Wait, what? Charlie Munger. Yeah, just stop doing stupid things, guys. Don't be selling by bottoms. We're right at bottoms in a lot of these commodity stocks. Just hold on, guys. If you can hold on, you'll get your dreams. If you can hold. If you get impatient and you get scared because of volatility or something like that, you're losing your position at the beginning of the bull market, which I think is a big mistake. Allow me to introduce you to the new market leaders, healthcare and energy. Yep, energy is going to be a big one here, guys. Energy is going to be a big one. And again, it's the same story for energy stocks relative to bonds. We're starting to break out. You're at resistance, 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 resistance. This whole thing is the consolidation. You had your end of consolidation move in 2020, and this is now a new bull market. This is wave one. Wave two is the pullback, and we're going to bust through. Bust through right here. Oh yeah, look at the volatility Bollinger Band squeezing into a corner there. Oh, it looks so good. Looks so good. Oh my goodness. Gold has a very good-looking slingshot move in play that could be going parabolic. Posted this setup first time at Blue Breakout. Few believed it. And then, so yeah, we've got this 5-year parabolic base. It's broken out. It's ripping. Why do we think it's going to go parabolic? Because, I pulled it up. Hold on. It's because of this. If you go to JP 10-year, that's why. Because interest rates are going to do this. Nobody's going to want bonds, and they need an alternative. What this is they're selling bonds, and interest rates go up when they sell bonds. So everybody is selling bonds. Here's TLT. This is our U.S. American debt. This is your shoulder, head, shoulder, top. We're ripping lower. This is going to break to the downside on the long term. I don't know what's going to do in the short term. And even if we do this, it's still going to go lower. That'll just be a temporary move. So everything's broken to the downside. People don't want bonds. So what are they going to buy? They're buying gold. There's gold priced in dollars. You guys check the Japanese yen. So JPY, look at the JPY. That thing, look at that. Look at that thing. See ya, wouldn't want to be ya. There's your big cup and handle for the 1980 to 2019 breakout. So just so you guys understand, this is this is the breakout, obviously, right? Look at that parabolic move. This is your cup and handle. This is your cup, and then this is your handle. And that's the breakout. And that's in the Japanese yen. Now, look at this. XAG USD is silver. All right, this is silver priced in dollars. And what do you think we could get here? Oh, wait, that's a cup and handle, right? Your cup, your handle. And maybe we pause here for a little bit and chop sideways. That's the exact pattern that I've got here from the previous fractal. So this fractal here is from back here. So this one, which I squeezed, so it's that one there. I just squeezed it a little bit to match what we have here. And then we could maybe chop sideways for a little bit whenever that happens and rip higher like that. And when this chops sideways, I think that's when oil's going to rip. That's my guess. So it's a slightly different market condition. But we're going to head way higher. This is the cup and handle. You saw the cup and handle of gold priced in Japanese yen. So really what this is just the dollar getting smoked. The dollar is going to get smoked. And same with the Japanese yen. The Japanese yen is going to get smoked. I mean smoked. Then you're going to see oil absolutely light it up when silver, because silver is going to light it up too. Don't get me wrong. We're going to light this thing up in all different markets. And it's the dollar getting smoked. So this is going to go all the way up here to probably this top area, like here and here. And then we're going to go up here. And that's $800 oil there. But people are going to say, oh, you're crazy, Andy. No, it's supply constraints on top of the dollar losing a lot of value. So that's what's coming. And I'm positioned for this very thing. And I was lucky enough to partake in it in 2020, lucky enough to buy more here. It's go time, baby. It's go time. Here is the energy sectors breaking out of a multi-year coil versus the S&P 500. Yes, it is. Yes, it is. It's a beautiful thing. It's a beautiful thing. XOP divided by the S&P 500. Let's get off log, and there's your falling wedge double bottom, looking beautiful. We're putting in the other bottom here. It's a double bottom, and we are about to rip it. There it is, breaking out. Oh gosh, look at that thing. Oh, it's such a beautiful thing. Such a beautiful thing to be long energy here. And some of the other companies, they look ridiculous against the S&P. I'm not going to pull it up because I don't want to give the names out, but ridiculous. And here's we can do let's do gold. Let's do this GD. I don't know if GDX has enough history against the S&P 500. Oh yeah, it is. So this is logarithmic of GDX versus SPX, and we're coming through here. We got a little bit of resistance coming through here. I like doing this. I don't like the lines. Let's do the rectangle. So we've got a little bit of resistance through there. We're coming up and we're going to break through this. This is GDX versus SPX, and that's gonna go all the way up. But we're just coming up with a little bit of resistance, a little bit of a selling pressure. It's okay. It's not going to be the end of trend move. We have a long way to go. Long, long way to go. It says the goal of investment is to find situations where it is safe not to diversify. And I talked about that last time. So that's where we're going to end it. That's all I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. We do have a bunch of really good opportunities right now. It's a good time to join. I'll go over the midweek update, which I'll be releasing here today for everybody to see. And so go to the website if you'd like. You can see those opportunities. And yeah, there's a bunch. There's a bunch that are happening right this second. Now, they're not going to last forever, some of these opportunities. There'll be different opportunities as these opportunities come and go. And the opportunities, they're low. And then when they break out and move up, they don't become opportunities anymore. I'll give you an example right here if you guys want to know. So one of the companies that we purchased on the website was New Gold. New Gold is one that we partaked in, and we have this same setup in a couple of different sectors. This same exact setup. It's a falling wedge, and I think that this is going to turn out to be one big double bottom, but then a launch pad. But we purchased over here in this corner here. And there are other companies that we purchased too. This got bought out by a different company. But yeah, this was a 7-bagger, a little bit more than a 7-bagger, depending on where you purchased it. Maybe a little bit less if you purchased above $1. But we got it at $1 and below $1 and all through there. It's about $1-ish. And yeah, this is one of the successes. Now there are companies down here that we can purchase in other sectors right this second, like oil and gas, energy service. We've been buying a whole bunch, and I think this is coming next. So, and this was a 7-bagger from mid 2023 to where we are today. And I think it's going to go all the way up, but that's just me. But and this is not a good entry point up here. You want to get in down here. The best you protect your downside risk, and then you maximize your upside potential. So that's some of the things that I teach on the website. If you guys want, what opportunities do I have? What do they look like? What's the position size, the allocation that I'm putting? And then you guys are going to have to translate that to your own personal decisions that you have to make on how you want to approach the market and the allocation and strategies. I can teach you my strategies. I can teach you what I'm doing, which has been very successful. But again, I might be in a different circumstance than other people, and I can't advise anybody one-on-one or anything like that. I can only show you what I'm doing. So, but that's all I've got, guys. So we'll end it there, and we'll catch you next time. See ya.